Hope everyone is doing well. This is going to be a short video, and I just want to talk about minor and major reversals. I'll catch back up on the past couple of days and make an Emini review soon. But one thing that's really important to understand is minor and major reversals, and that's because they're traded differently. And this is the same concept as understanding the difference between a trend and a trading range. But I want to get a little more kind of technical about it. And really, this is kind of like it's a little bit of an elementary piece in Al's videos and concepts, but it's really important to understand what is a minor reversal, and a better way to say that is what is a minor move and what's a major move, if we just make it really, really simple. A major move is one like today, where you look at the chart and there's not a lot to the left. I had to pause it, but I forgot what I was saying. And I'll expand more on this later, but understand the difference between minor and major moves. A major move is one that you look at the chart, it's clearly going down. Here, this is the major move. And if you sell, put a stop up here, maybe put a stop up here, you're probably going to make money. And even here, if you sell below this bar, it's a double top. Probability is slightly going to favor the downside. Bear breakout, follow through, sell this close. It's always in short. The major direction is down. Sell this close, stay short. You can get out above a bull bar and look to sell again, or just trail your stop. And then you get another breakout, move your stop up here, another breakout, three sell climaxes, parabolic wedge, get out above this bar. And as long as you use the stop, maybe up here, you can just sell pullbacks all the way up. So sell 5 or 10 points higher, scalp out, second entry buy. Maybe you sell above this high, which is what they did here, or you sell below this bear bar. It's a wedge, 1, 2, 3, so you can sell. And if you get stopped out, sell again, or you can sell below this bar, put a stop up here, and take profits down here. And at this point, it's still a major trend, or it's a bear trend. This is the major reversal down, so put your stop up here, and sell above bars, or sell at the moving average, sell when it goes up here, and then you get a big bear breakout. The stop's now up here, maybe here, and the market goes sideways. Now let's compare that to today, let's compare it to Monday, which was yesterday, where you have a bear bar, and then you have 2 more bear bars. Well, what's the major move? Is it up or down? Well, you can't tell because you had to move up here, you had to move down here. So I don't know what the major trend is. We might be in a bull trend, might be in a bear trend. Therefore, this is a minor move down, this is a minor move up. And really all that means is you should scalp. You should look to, there's going to be less, it takes less to reverse the market. So if I go back to this day, it's going to be really hard to reverse this bear trend or possible trading range. It's going to be really hard to reverse this, really hard to reverse this. So it's clearly going down. And the bull bar, second entry buy, is not going to be enough to reverse it probably. Well, here, if one is selling, do they get out here? Well, it's possible double bottom. May get a deep pullback. Is the market always in long right here? Maybe, but it might be always in short. So if you sell below here, you have to get out here. If you're long, 3 pushes up, possible second leg trap. Maybe you don't get out here. But then what about here? It's a bad signal bar, and then it reverses, and then you get a second entry short. And it's really hard to tell. It's going up, but it's top of this range. I don't know, maybe it'll sell off all the way down to here. So it's very unclear. You get a strong breakout. It might be always in short now, but it's possible second leg, and you're thinking, darn, this is low in a trading range. I don't want to sell here, but I want to sell because it's 3 consecutive bear bars. And I don't want to necessarily buy above this bull bar because it's 3 bear bars, because this might be a minor move up, but it also might be test all the way up to here. So everything's minor. and it's hard to swing trade. And traders will trade it differently. The problem is, and this is something I'll talk about later, is traders get used to seeing this and they start saying, okay, I need to be quick to exit, quick to get out, where when they see this, it's hard to sell and use a wide stop because they're so focused on minor reversals, and they inherently trade a major move the wrong way. So more to come. Hope this helps.